This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com. Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry, Lutz. Today is 2/9/22, show number 365. Well, a miracle stock market recovery is underway, Nick.
Yes, the markets are in rally mode today, at least so far. And, I have to say, yesterday, the major indexes were finally able to have a very strong close, and that certainly gave the bulls some confidence today. So very good rally. And you also had a couple Fed presidents out there trying to calm the markets down, saying the Fed may not raise rates more than 3 times this year. I call that damage control. But that's it. Markets are in rally mode, and they look pretty good right now.
Well, they never cease to surprise, but it's the Fed, and you always got to wonder what they're really up to, what the real agenda is. But 3 times is different than 6 or 8, isn't it?
That's right. Right now, a lot of market participants are penciling a minimum of 4, most likely 5, and we've heard some chatter that you could even get 6. So just the fact that they're coming out saying no more than 3, that's definitely giving the markets a little bit of a reason to rejoice here. And the bulls are going in and buying up some stock. But overall, I got to say, Kerry, if you know the chart patterns and you understand how these things unfold, there's no surprises here.
Well, one piece of news that we got that might have persuaded them was that mortgage applications are down, refis are down, everything's going down there, and they got to be very careful about popping the housing bubble.
Yeah, and there was news out actually today, right? So that has been the case, and it's going to be very, very tough going forward if rates continue to climb. And, again, I've been talking about bond yields on here forever. Today they're stalling a little bit. They're, down a little less than 2 basis points. But they've had a huge move recently. The 10-year US Treasury note yield is still sitting at around 1.93% as we speak. So, we are getting close to that psychological 2% level on the 10-year. And that's going to be a real test for the markets, especially in a lot of industry groups like the home builders, commercial real estate, utilities, and obviously tech stocks, which are very interest rate sensitive. So, we're going to have to watch those industry groups pretty closely. And again, they seem to be holding up really, really well today as yields stall. But when yields get over that 2% level on the 10-year, it's a different scenario. Then it becomes a reality. Oh, wow, yields are really on the rise. What are we going to do? But like you said, it's already affecting a lot of people are going out and saying, I can't afford this. It's just become too expensive now.
Yeah, for sure. Well, we'll see what they do. Once it breaks 2%, though, then the resistance level becomes 3%, right?
Well, it will go a little bit differently, but you'll probably 3% would definitely be a big level, but you'd probably go to 2.25, then you'll go to 2.5, 2.75. Pretty much every 25 base, every quarter point will be a resistance level all the way up to 3% on the 10-year.
And you have to keep in mind, with inflation running the way it is, even if it goes up to 2, 3%, 4%, you still have negative real rates.
Yes, you do. And again, that's been in play for so long now. So, we'll see how this shapes out. But overall, I believe if yields go up too quick, it's a real negative for the stock market. Stock markets want to still have that very, very low yield environment. And, we'll see how this plays out. But I believe yields are on the rise.
So, not from a political standpoint, but from a purely economic standpoint, Canadian trucker strike, it's going to shut down eventually the border trade between the U.S. and Canada, largest open border in the world. And is that somehow factoring into all this?
I don't think it is right now, but it could at some point. really, cause some supply issues. There will be problems from it, but maybe the market is overlooking it, saying, this is going to force Canada really just to open up and to scrap all these ridiculous mandates. So, the market is always forward looking, and, maybe the Canadians really have pulled it off this time, and they're going to have these politicians, running scared for a little while.
Yeah, well, they're starting to break, but till I see all the restrictions, and the guy in Alberta, that premier, said, oh, we'll get rid of the mandate, that's gone, or the passport, but everything else is going to be phased in. And they said, no, we want everything gone now. And, when they start giving little crumbs, little bits, it shows who's got the strength there.
Well, one thing, the people always have the power. They just don't realize it because, it's a sheep mentality. And these people in the governments, they know that, and they've been abusing the people for a long, long time. I think the people are starting to finally wake up and say, hey, you know what? We pay these salaries to these people. What are they doing for us? And I think, finally, maybe people are starting to wake up. I mean, it's a long shot. I'm not putting a lot of faith in people, but I think it could be happening.
Well, it's not what they're doing for the people; it's what they're doing to the people.
To the people, exactly.
And Canada and Australia have been the most locked down, restricted populations for the past 2 years. So I have to admit, it caught me by surprise. But being a truck driver is a tough job. They keep making it tougher with regulations, taxes. When you go through a toll plaza, well, we don't have them anymore in Florida, but when you did, you pay $2, the truckers pay $20.
That's right.
The cost of diesel, all of that has just put a really big burden upon them. They're really over-regulated. And now I sent you the link where the federal government, because we have a trucker shortage, who would wonder why they're actually going to let teenagers drive big rigs, right?
Yeah,
Tandem trucks. Is that insane?
Yeah, it is insane. It's absolutely, it's ridiculous, really. But, this is the state of affairs that we're in just 1 year in this country. It's just, it's rather remarkable when you think about the decline that has taken place right in front of our eyes. So, again, there were other regulations too. I think you had the California governor saying, hey, you can't come in here with a rig that's under or older than 3 years or something like that. That, these things are the reason why we have these supply chain problems right now. And again, you have I don't know how many boats are out there off the coast of California, just sitting out there waiting to be unloaded with a lot of cargo. So, it's rather remarkable, but these politicians, they act like they give you the solution, but they're the problem in and of itself.
Yeah, well, and then they're going to rush in to solve the problems that they created using policies that don't work. Well, enough of the politics, but this isn't a right or left thing. This is just the way it is. So gold, up a smidgen today, silver down a little bit, at least on spot.
Yeah, that's the case right now. Silver's basically flat, down just a touch, and gold futures are up just a touch, basically a point here. So, but one thing I will say about gold on a short-term basis is that it's gotten back above its major moving averages on the daily chart, and that's a positive. So it may need to do some backing and filling here, and then it could potentially go back up and test the January 25th highs. I wouldn't rule that out. I think that certainly is a possibility. Now, if it loses those moving averages, then we'd probably go down and test basically the lows that were made, in December. But we're in a range, and that's what gold is doing. It's really just in a long sideways range, which isn't necessarily a bad thing. The bigger time pattern, meaning the monthly and quarterly charts, that's where the weakness still lies. So they have a lot of improvement to do in order to go significantly higher from here.
Hey, so let's take a look at cryptocurrencies. They've had quite a rally the past week.
Yeah, cryptocurrencies have acted really, really well. And again, we talked about it on this program. You got to just watch the pattern right now. But one thing I'll say is that level that we talked about, the downside target level, when we got back above it, that served to be a pretty good low. And right now, cryptos are hanging in there. So they're back to around 44,000 on Bitcoin. I think they can go to 48,000. So when Bitcoin gets to 48, I would start to really get a little bit more concerned. But my expectation is on Bitcoin futures that they're going to go up to that 48,000 level.
And you think that'll be shortly, huh?
Yeah, I think that'll be shortly, and that could be it. But I do think we'll get there pretty quickly.
All right. Well, that's it for today. Make sure you go over to Nick's site, inthemoneystocks.com. You'll see how he's been beating the averages for decades. And make sure you check out the Twitter feeds at ITMS, at Nick Santiago01, at Kerry Lutz. Emails are always welcome, kl@kerrylutz.com. And Nick, we'll check in with you on Friday.
It sounds good, Kerry.